the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to create and preserve more wealth, defer capital gains tax, and really help other people, especially if you're in the brokerage industry, you're in the commercial real estate syndication industry, you're a crypto expert, financial advisor. We encourage you to go to capitalgainstaxsolution.com to learn more about that. Hey, I'm your host, Brett Swartz. In each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is out of the great state of Florida, and he is the founder and managing partner of Harborside Partners. He's been actively involved in over $150 million worth of real estate transactions since 2006 and carries extensive knowledge in renovating and repositioning multifamily and commercial real estate. He also happens to be an Eagle Scout and holds a bachelor's degree from Central Connecticut State University and so much more. Please welcome to the show with me, Charles Carello. Charles, how you doing?
Great, Brett. That was an awesome introduction. How are you doing today?
Doing great, my man. Yeah, we met at the Best Ever Conference or at least in person in Denver, Colorado. Was it in February? Is that what it was? Was it when then?
Yeah, February, March, something like that.
Yeah, February, March. And then I love that you're in the multifamily space. It's our deep passion to help people grow wealth in multifamily and investing in real estate and doing it in a tax deferred efficient way. And so it's cool to have you back on the show. In fact, I think I had you on my show about a year ago, and I think I've been on your show. And so for those who are wondering, you can go back and check out that episode. I don't know what episode number it is, but if you go to YouTube and you search Capital Gains Tax Solutions and search Charles Carello in that, you can find that. But for those who are getting to know you for the first time, Charles, would you give us just a brief overview of your story and your current focus?
Yeah, so I started investing, like you said, multifamily in 2006. I was buying smaller residential multifamily and some smaller commercial mixed use properties. I self-managed those properties for about 6 years. I moved to Florida in 2012, started in placing like third-party management with my smaller stuff. And then just about 2018, 2017, we started getting involved with syndication and larger properties. And now our focus is on larger properties, 100, 150 unit plus properties in the Southeast with a, I guess you would say with a real target on 2 or 3 markets in Florida and greater Atlanta, and then a couple places in Texas and Oklahoma.
Excellent. So and we're talking about passive commercial real estate investing. And we're also going to dive into kind of the multifamily aspect right now and talk about a couple of deal stories that Charles is doing. So Charles, I'm curious, like, what are you seeing right now, right? Cap rates, interest rates, things are shifting pretty quickly. What's your take on the health and the status of multifamily investment real estate? Where are you buying if you're buying? And how have things changed in the past 3 months for you guys for underwriting?
For the last 3 months, well, we've seen over this whole year, over the last 6 months, I would say that we've seen a lot of sellers come to terms with the higher interest rates. So we're seeing cap rates expand a little bit in different markets we're looking at. We're seeing sellers come back to us that we turned away deals of 6-9 months ago. So really stuff we were looking at, beginning of this year, end of last year, we're actually seeing come back. And I think we're seeing a lot of floating rate owners with a lot of floating rates are really coming back to kind of bite them if they didn't have any type of cap rate cap what do you call it? Cap rate,
fixed interest rate, or a cap on how high it could go.
Yeah, that's correct. Yeah, I'm sorry, I'm losing my words here. And if you don't have any type of interest rate cap on what you're doing with floating debt, I mean, it's really kind of like a bloodbath for a lot of owners out there. And we see that coming into the market now, and we're seeing, we're seeing the beginning of it. We'll see what happens. We've been more of a seller this year, not so much as a buyer. And our last property we purchased was earlier this year, 157 units in Gainesville, Georgia. And so that's about 50 miles outside of Atlanta. And we're having great success with that property. But really just we're starting to see stuff loosen up now. And I think we might have one more acquisition this year.
So you're seeing sellers coming back to you and saying, hey, you know what, Charles, that offer you gave us 6-8 months ago looks pretty attractive. And we didn't make a deal for whatever reason with these other buyers. Are you still a buyer? Do you want a deal? for those sellers who are doing that, are you changing your offer? Are you making the deal? Talk to us about that.
In most cases, we always want to make the deal, but we are editing numbers in most, if not all, the cases because of the debt. I mean, where we are now, you have the LIBOR that's gone up 3.5%, and since the beginning of the year, and that's something that really rides on that and SOFR for your floating rate debt. So we really have to be careful with what we're doing there, and then getting rate caps and knowing how many years we're going to get that rate cap for, if we're going to get 2 years or longer. And you just make sure you have like a really clear plan when you're dealing with that. Fixed rate is something that we've always been interested in. We're also looking at sellers that are coming back that have assumable loans with fixed rate. We did a deal like that end of last year, which was great. It was at that point, it was a higher interest rate but it is now, we knew that we are going to have this coming up. So it's something that turned out to be a great deal, and we're working on that deal as well.
Yeah, absolutely. The assumable interest rate, right? It's really fascinating now, since it's been precipitous increase in interest rates. And you always wanted to have that margin between what your cap rate was and your interest rate. And then
Mm-hmm.
the other part of it is how much you can raise rents in a certain period of time to bridge that. And so what we've seen in the past few years before everything kind of shifted was people were still willing to buy cap rates, even if their interest rates was higher. They didn't mind having that negative leverage if it meant they could increase the rents to a point where their cap rate, is going to exceed their interest rate. But now it's just it's a fascinating circumstance, because all of a sudden we've seen such increase in cap rates that it's like, well, even if you bought it at X price, like, and by the time you renovate it, like, you might just burn yourself with debt. So talk to
Yeah.
us about what kind of margins are you looking for interest rate versus cap rates, and that correlation.
So when we're looking at it, it all depends on the property and the market, because like you said, there's gonna be markets where you're gonna be able to push rents faster and higher. And going through 08 and 09 with I never saw rents decrease, and people are always saying, well, rents are decreasing. It wasn't really a thing. We didn't really just have as much rent growth. And so that's something you really have to plan your numbers on when you're going in. And there's still places in South Florida, not that we buy in South Florida per se, but there's still markets, many markets out there that are having high single digit rent increases still with everything that's going on. If you read the news, it looks like everything's going down, but there's still areas where people are moving to. Fort Lauderdale, Miami, other places around the country. And you'll see in Austin, and you'll see that they're getting like 7, 8, 9% year over year, still getting rent increases with everything that's happening. So it's one of the things you really have to know for the market of where we're going to be. Typically, we like our deal that we have out in that we were just talking about earlier this year. We had a rate cap on that went like a 1.5 higher. And so pretty much everything over the last 2 points that have gone up in interest rates has been covered by our provider has been, covered by that cap. So that's one of the things that you really have to do. Just be very careful and cautious. And then we're just being, just telling we're preparing for a rocky 2023. And that's what we're telling investors as well. And that's something that we're going to really cushion our property savings accounts and money market accounts, and just make sure that we have enough if anything ever happens during these processes. And then on some of mainly we're in B class, we have a couple properties that are like CC plus. And in those properties, we've been really focusing on very, very light value adds on those properties and putting the heavier value adds on hold, and just keeping the occupancy up on that. Because when you start seeing even in hot markets, we have one in Tampa, and what we've really been doing there is, hey, instead of putting in $4,000 and doing over the whole property, maybe we'll put in $1,000 or $1,200 and get up to a certain level, increase the rents $50, $75 with what they were before, get that money back within 1 year. It's a great return for our investors, and it keeps the occupancy, because now you're going to have a tenant in there that's probably going to stay 24 plus months. And that's really what we want to do when we really don't know what's coming up. You know what I mean? So, we might be in the 07 and 2023 might be 2008. So it's, you don't really know what's happening.
Got it. And when you're writing offers, are you putting an interest rate provision in place? An example would be if rates increase beyond, let's say, 0.5% or 1%, then buyer has the option to walk away from the deal with no deposit forfeited.
Yeah, I think the days we've seen of everything going hard day one are kind of over. And I think that, you're still going to find some sellers that still haven't come to terms with it. But I think most sellers that really want to sell their property, not just putting it out there and just fishing, you know what I mean? Ones that really actually want to make a deal, they're coming to terms with it and they're accepting terms like that. Just normal terms that you would have, let's say 3-4 years before, you know what I mean? That we were writing back in like 2018, 2019, just normal terms where it's like, yeah, if we can't get financing, this is the provision, and we're going to get our deposit back on that. And because with right now, with where everything's going with interest rates, I mean, it can really change the whole dynamics of the deal. And, you don't want to be too bullish on where the rent increase is going. I know it's, we really, as value add operators, really focusing on generating income and pushing rents and pushing increasing income. But the thing is on that is you have to be very careful with that. If you're going into an area that, we're going to a part of the market cycle that it's going to be an issue. You know what I mean? You're not going to be able to re-rent those properties out, or they're going to be sitting there as long vacancies. I mean, that's not doing any good for you, your tenants, your investors, anybody.
Talking with Charles Carrillo, HarborsidePartners.com. That's HarborsidePartners.com. He's a multifamily syndication expert, and he's here to help you create and preserve more wealth with multifamily investing. As a passive investor, you have an opportunity to invest with somebody who's experienced and has a track record and is passionate about what he does. So, Charles, I'm curious, where are you investing right now, if at all? And maybe talk about the last deal you just closed and some of the deal specs.
So the last deal we closed was that 157 units in Gainesville, Georgia. And really the areas that we're really focusing now is we have 2 deals in pretty serious underwriting outside of Atlanta as well. And then we have one in Jacksonville, Florida. So I love Tampa as well, but Tampa's just gotten too expensive for the last couple of years. We haven't bought there since 2020. And deal specifics on our deal in Gainesville, 157 units. We purchased that property right now. As where it stands, we have increased the NOI by 54%, which is pretty phenomenal since February of 2022. And when we bought that in that area, it was like late 80s. I want to say like 86 vintage. So it's a property I like buying, 80 and after, because it's much better property, much better bones, a lot less issues. And where we're going with that property, we've done a lot, if not, we've done a lot of the exterior value add process already has been done on that. And right now we're doing about 2 to 7 units per month. So we're able to maintain a pre-leased occupancy of like 97, 98%, which is obviously you can find some syndicators that are a little bit more aggressive, but we're a little bit more conservative where we're doing units as they come up, and we're re-signing leases, and we're renovating some units, and then just re-signing leases. Maybe doing, like I said before, a little paint, little cleanup, re-renting it out. And that keeps it safe for the investors and safe for the asset, because you just want to really keep that vacancy to a minimum when we're trying to maximize cash flow here and keep a little cushion for what might be ahead. I mean, this might be a very minor pullback that we have coming up, if we do have one coming up, but no one really knows, so it's always better to be safe.
Okay, a couple things. Average loss to lease in Gainesville. What was that amount per unit per unit per year per month?
I think it was somewhere off the top of my head. I want to say it's about 150, 175, and we're burning that off little by little. And that's taking some work, but we've really been, because we'd give tenants an option. Hey, we can move you to a renovated unit. We can do this. And we'd have some that would re-sign and want to stay in the unit. So they'll pay that rent increase to stay another year and stay in their same unit at the same condition. So we're finding things that we didn't know would happen. We thought that, most cases people want to move into the newer product for for paying an extra $200, but some of them were like, well, we'll stay where we are and pay an extra $100 on the renewal, because I know my rent's been fixed here for so many years. So it Tampa. I mean, Tampa is just still very expensive, and it's a great market. It's one of the best markets in the United States. And that whole I-4 corridor, so if people aren't familiar, it's really going from Tampa, going Lakeland, Orlando, and then really all the way up to Jacksonville, right across the state there. And going up to Jacksonville, there's a lot of new industry that's coming into Jacksonville. There's becoming, myself coming from Connecticut, I kind of follow the insurance and where companies are going. And having some family that's in the insurance industry, they would always tell me as well. And I would, look at this. There's a lot of insurance that's moving down to Jacksonville or has moved down there. So you're getting higher paying jobs in that area. And it's a great hub. I mean, it's close to Georgia. It's close to Orlando. It's got train access. I mean, it's just a very up and coming place. And it doesn't have it's not just it's overrun like Tampa and even Orlando at this point since COVID's kind of phased out. It's Orlando's kind of gone crazy too with some of the largest rent increases year over year. But I think Jacksonville hasn't gotten there yet. So
excellent. Thanks for sharing, Charles. That's really helpful. We're moving to the part of the show where we talk about capital gains tax and sometimes the frustrations with 1031 exchanges or the lack thereof options for people exiting businesses, cryptocurrency, primary homes, or even GP positions when they go to exit. So I'm curious for you, Charles, what do you feel like has been the biggest frustration when it comes to the 1031 exchange and or not having options for people to defer capital gains tax?
I was just talking to someone at a meetup last night about this, and they had capital gains, and they were telling me about the hassles they were finding with the 1031. And it was kind of like a nightmare they're having with having to, you have this short window. You can only identify so many properties. And I mean, you really don't want to, not that we have to buy at the bottom, but I mean, you really don't want to buy at the top, right? And like we were saying, sellers are, some are coming back to earth and some aren't. So depending on where you're trying to buy, you're moving money from one place to another, and you're trying to buy, that can be very difficult. And so that's something that we've seen with a lot of people, and it leaves just a couple options if you don't want to do a 1031. And really the DST is one of the best. I guess if you want to do a qualified opportunity zone, that's a whole different animal. But 1031 just has there's a lot of, when you dig into it, there's a lot of moving parts to it that you have to be very careful of. It's not just moving just your gains. You have to move your gains. If you had debt on it, you got to get more debt on it. Like there's a number of different terms and points to it. So when people just loosely throw around 1031, I kind of caution them and like, hey, you want to do some more research on what's going on, because it's not that easy. And especially if you're saying you're changing asset classes, that's going to be something that's I don't think even possible at the 1031 if you're trying to go into real estate from, say, crypto, like you said.
It's not. And in fact, that's why we love the deferred sales trust, which is not to be confused with the Delaware statutory trust. You can exit crypto, businesses, investment real estate, really any kind of asset, primary homes, defer the tax, and then you can go into other asset types. You can diversify, you can get liquidity. You can also go back into real estate. It's an amazing way. We call it the Netflix way of exit planning versus the blockbuster 1031, which can be just a nightmare for people. If you want to learn more about this, by the way, and how to escape feeling trapped by capital gains tax, you can go to capitalgainstaxsolutions.com, capitalgainstaxsolutions.com. We have a free ebook you can download to learn about how to do this, as well as you can join our free mastermind, which is every Friday. We would love for you to be a part of that. That being said, Mr. Charles Carrillo, are you ready for the lightning round?
Yes.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you make sure to tell yourself to do?
Buy property in better areas.
Excellent. With number 2, what's the number one book you've recommended or gifted the most in the past year?
80-20 principle.
Number 3, what is the number one leadership quote or theme that you strive to live by?
Only a sucker sells at the top.
Number 4, what are you most curious about right now?
Very interested in seeing where blockchain goes, and seeing like how that technology is going to change all parts of our life.
Number 5, or the last question, after all your success helping all the people you've helped, what's the number one habit or practice that you tried to practice on a consistent basis so it helps you keep you centered in your values and stay encouraged to charge forward to reach new heights?
Having a morning ritual of some sort where there's a little reading, there's a little time to yourself before the craziness starts of the day.
Charles Carrillo, for those who want to get in touch with you, could you remind them one last time what's the best place for them to find you?
Sure, Brett. They can go to harborsidepartners.com. And if you're interested in passively investing in real estate. There is a free guide there. So feel free to sign up. And we also have a weekly newsletter that goes out. So looking forward to speaking with you if you're interested in investing.
Charles, thank you for being on the show. So appreciate it. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax referral options, and not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust and sometimes the 1031 exchange too when it makes sense. We're not opposed to that when it makes sense. It's just harder and harder to find these days. Is an amazing way for you to defer tax, grow your wealth, but also investing with people like Charles Corella into multifamily value-added properties in pro-business growing states that you can see, touch, and feel, and increase the rents. It's incredible. Places like Jacksonville, places like Georgia, Texas, Alabama, Tennessee. These are the places you want to be looking at. So make sure you get with Charles, and also connect with us if we could help you at all with any of all of the above. You can go to capitalgainstaxsolutions.com. We're also streaming on Expert CRE Secrets. So we appreciate all of the commercial real estate experts out there that are checking us out. And we appreciate everyone there on YouTube and on the podcast and on Facebook. Please rate, review, subscribe. Please share this with someone that can be of help.